Crypto is experiencing yet another dip, and this time it's a big one. In yesterday's video, we discussed a slight pullback in Bitcoin and alts as a result of a mild liquidity crunch. However, yesterday, we saw the largest liquidation event in crypto history after Trump reignited tariff tensions with China. In today's video, we're going to break down what exactly happened yesterday and why are markets pulling back so badly. Is it so over, or are we still on our way to the top? If you're excited to learn more, like and subscribe down below, and let's find out why the streets are filled with blood. So guys, in yesterday's video, we discussed a slight pullback in Bitcoin and alts as a result of a mild liquidity crunch. But that by no means explains the massive sell-off that we saw today as a result of Trump's Truth Social post announcing additional tariffs on China. So let's have a look at that post really quick. Learn that China has taken extraordinarily aggressive position on trade. Essentially, they're restricting trade and leveraging additional tariffs on U.S. imports. He's announcing a 100% tariff on China. You can pause the video and read all of this if you want to. We're not going to do that right now. Let's have a look at what did they actually do. So we have two actions that were taken. They expanded rare earth export controls, essentially added some new rare earths to their list of restrictions, essentially making it harder for the U.S. to get their hands on these things. And what they also did is they leveraged additional port fees on U.S. vessels. That goes into effect early next week. So upon learning of this news, Trump flew off the handle, as he does, and essentially announced massive tariffs on China. And so markets are responding to this. There's also another lesser known development that is also causing markets to pull back. As we all know, the US government has shut down. What has happened is that government employees are actually beginning to get laid off. And so what markets believed would be kind of a back to normal situation here in a couple of weeks, that is actually not the case anymore. Some of these workers will not be going back to work. And so there are two factors that drove markets down yesterday. And so I've got Mohammed Al-Arian. He's going to break down what these developments are and why markets reacted the way they did. Have a listen.
Because we've had two bits of news today that challenge something that was deeply rooted in the marketplace, which is that growth is sound, inflation is stable, the Fed is going to continue cutting, and policy volatility, the worst of it is behind us. So it doesn't surprise me. The social media post by President Trump is that phrase, massive increase in tariffs. And don't forget, we're talking not just about direct tariffs, but also secondary tariffs. So there is quite a big scope. And this comes at a time when the market assumed that things were fine, and by November we would have a friendly announcement. And then the second one that's flying under the radar screen, but it matters, the second announcement is the layoffs are started, which questions the notion that this is just a regular shutdown, where once we reopen, everything will be fine and the markets would just look through it. So it's two bits of news, a big bit of news and a secondary bit of news that is causing us to question what has been very friendly assumptions about the environment in which the stock market has gone from record to record.
And so the reason for this drastic sell-off is that markets were kind of assuming the best. They were somewhat priced to perfection. They assumed that the government shutdown would end, we'd all go back to normal. We thought the worst of the US-China tariff rhetoric was behind us, and we were looking forward to all the positive factors that we talk about on this channel. An expanding business cycle, more liquidity coming, a CapEx investment cycle coming, all of these things were looking so good. Markets were just happily chugging along. And then this happened and threw a massive wrench into thing, and it kind of knocked us off our horse a little bit, kind of knocked us away from this complacency. I got the CNBC Investment Committee. Listen to what they have to say about how markets reacted to the sudden news about tariffs re-entering the political sphere.
I think to Rob's point, been a fair amount of complacency, certainly around the issue of trade and tariffs. We haven't mentioned those two T words in a long time because, as Rob said, we've been fixated on AI. We've been thinking about earnings and how good they're going to be and the fact that the Fed's cutting interest rates, but we're, certainly reminded right in our faces today that these issues still exist, an issue with the most fierce competitor that we have, I think, globally on trade.
And so the tariff drama is back. Remember the difficult time markets had in February and March and April as a result of Trump's tariff rhetoric? We are now back in the throes of that. However, I don't think this is going to last, and many experts are feeling the same way. There's still a lot of bullish catalysts to look forward to, and I don't think that Trump is going to stick to his guns on this. As we all know, the art of the deal is to go max aggressive and then scale it back. We're going to go here, and we're going to renegotiate down here. And so this is a bargaining tactic. This is a bargaining tool from Trump. We know the game. Markets are going to react strongly because they always do, but this is actually a buy the dip opportunity. And many investors feel this way. I've got Tom Lee. He's going to break down why he is still very bullish and why you should be bullish as well. Check out Tom Lee's perspective. I think you're going to like it.
But to me, if I said, okay, what are the reasons stocks have been attractive for the past 12 months? You know, it's been about the innovation coming from AI, and it's the innovation as Wall Street looks onto the blockchain, and now it's the Fed that's beginning an easing cycle. These three things have structural tailwinds that aren't disrupted because of potential even rare earth dispute with China.
And so all of the structural tailwinds are still in place. The same reasons that we were bullish 48 hours ago are the same reasons that we should be bullish tomorrow and the next day. Nothing has really changed. We have had some tariff rhetoric thrown in there, yes, but this is just something that happens. Bull markets aren't always straight up. There's bound to be hiccups. This is one of those bumps in the road. And fundamentally, the US and China are too big and too important to just stand around waving fists at each other. And so eventually they will come to a deal. US needs rare earths from China to build their AI, and China needs the chips and the software from the US to build their AI. There is an AI arms race happening right now between the US and China. This is unfolding as we speak. The future is now. And they need each other, at least for the short term. And so I'm very confident they will come to a deal, and many expert investors are as well. They think this is a buy the dip opportunity. The bull market is in no way canceled, and it is still in front of us. I want to show you one last clip from Craig Johnson. It's a short one. I think you're going to like what he has to say. He thinks this bull market's still going. Have a listen.
And the buy the dip crowd will be there. And again, this bull market is not over. We will enter the fourth year of the bull market. It is usually fourth years are usually pretty good, up around 12 and change % for the full year. And we are optimistic for next year. But short term, I'll look to raise my price target on a pullback, not while it's sitting here at the highs.
And so Craig's looking to raise his price targets on a pullback, and so am I. This isn't financial advice. I'm not telling you what to do. Me personally, I'm just sitting in my bags. Nothing has changed. We're still very bullish looking forward, and I think you should be too. This is only another little blip that we will look back on and say, remember when Trump got mad at China in October, and remember how well we did afterwards. Because remember that October and November are still supposed to be some of the best months. And so if we are going to have this tariff tantrum, if we are going to have this news, let it be now. Let it be early in the month, so we can get past it and get on to making gains. Have a look here. We've got 29%, 30% almost average returns on Bitcoin seasonally for October, 40% in November. And if you look at this Christmas themed chart, October you can see is usually a very good month for Bitcoin, November as well. So we are still early in the month. We're not even halfway through. I would imagine this could very well be over in the next week, week and a half. They come to a deal, markets recover. And the clips that I've shown you today, I spent the whole day poring over what the experts and the best macro analysts in the world had to say, and none of them are terribly concerned. Yes, there are some things to be worried about. There is a reason why markets pulled back, and so I don't want to be flippant about this pullback. People did lose money, and I'm sorry if you did. But looking forward, nothing has really changed. We remain bullish on this channel, and I hope you are as well. And if you want to stay up to date with all the news, good and bad, you got to be subscribed to the channel. Leave us a comment down below. Like the video. We really appreciate it. As always, thank you for being here, and we'll see you in the next video.